India's agriculture supply chain depends on consistent, large scale production of essential inputs, and one company has established itself as a cornerstone in this ecosystem. With modern, energy efficient manufacturing facilities and one of the strongest distribution networks in the fertilizer sector, this organization plays a decisive role in ensuring availability of crop nutrients across key agricultural regions. In this analysis, we will examine its financial performance, competitive positioning, and the strategic factors driving its relevance in the fertilizer industry. I am CA Sebi George. Welcome to Decoding Equity. Let's uncover the story of Champal Fertilizer and Chemicals Limited, the largest private player in the Indian urea industry in terms of production capacity, which accounts for nearly 15% of the total urea produced in the country. Across the last 12 quarters, Champal has shown steady sales with low volatility. And the highlight is the recent momentum. The last two quarters have delivered some of the strongest and most consistent numbers in the entire period. With better gas availability and full capacity utilization, Chambal continues to sell every ton it produces. These back to back strong quarters clearly reflect the company's operational stability and solid demand environment. Urea forms nearly half of India's fertilizer consumption, and farmers depend on it because our soils are largely nitrogen deficient. Demand stays strong every year, supported by government subsidies that keeps the price low. And even with the large domestic production, India still imports 7 to 10 million tons annually to meet its huge requirement. This means companies like Chambal Fertilizers and Chemicals have absolutely no problem selling whatever they produce. Demand is steady, structural, and fully backed by the government. This analysis is prepared purely for educational and informational purpose. I am not a SEBI registered advisor, and this video is not a buy or sell recommendation. All financial data is sourced from publicly available information. Chambal Fertilizers has shown a clear strengthening in profitability over the last 12 quarters. The latest September 25 quarter delivered a PAT of Rs 649 crore, one of the highest in recent years. This sharp rise reflects better operating efficiency, lower input cost volatility, and smoother subsidy inflows compared to earlier quarters when PAT stayed around 300 to 450 crores. Chambal's operating margins stay in a steady 9 to 12 range thanks to the government's cost plus model. Even though financial year 24 saw a slight dip due to the energy cost, margins have stabilized again in recent quarters. The key strength is the predictability. Chambal's operating profit margin remains stable, consistent, and highly reliable year after year. When we compare the Chambal Fertilizers CFO and PAT over the last 4 years, one thing becomes clear: the cash flow quality is inconsistent. FY22 saw a negative cash flow despite healthy PAT, signaling stress in the working capital. Financial year 23 and 24 were strong years with a cash from operation far ahead of the profits, driven mainly by faster subsidy realization. But financial year 25 show a sharp drop in cash from operation to around Rs 1,394 crore, even though the PAT bounced back to 1,657 crores. This gap indicates that profits are not fully converting into cash, largely due to pending subsidies and working capital tightening. It is not a red flag yet, but definitely a metric to keep an eye on. Chambal Fertilizers is virtually a debt-free company today. Borrowing have come down to extremely low levels over the last 3 years, giving the balance sheet exceptional strength. Interest costs are minimal, and the company is fully capable of funding operations and capex from internal accruals. This light debt structure is one of the Chambal's biggest financial positives and adds strong stability to its long-term outlook. Total institutional holding in Chambal has remained broadly stable over the last 12 quarters, moving within a tight band of 20% to 24%. What is interesting is that even though the DAI participation has come down sharply, the overall institutional strength is being maintained because FIS have steadily increased their stake. The balance keeps the total institutional ownership healthy, indicating the large investors, especially the global ones, continue to see long-term value in the company. When we look at Chambal's competitive landscape, it operates in a market dominated by a mix of large PSUs and a few private players. Its closest rival in the urea segment are National Fertilizers, Rashtriya Chemicals and Fertilizers Limited, Gujarat State Fertilizers and Chemicals Limited, and Fertilizers and Chemicals Travancore Limited. Companies with a strong capacity but slower operational efficiency. What sets Chambal apart is its scale, cost efficiency, and strong distribution network in North and Central India, allowing it to consistently outperform most peers despite the heavy regulatory environment in urea. Chambal delivers solid capital efficiency, ROE stays strong, and ROCE have improved steadily. The company is clearly using its capital effectively and generating consistently high returns. India's urea demand is rising every year, and the country still depends heavily on imports. That means, as I said earlier, companies like Chambal face no demand risk at all. Whatever they produce gets sold immediately. Gas availability has improved, which boosts energy efficiency and strengthens the margins. And since urea is a national priority product, government support in the form of stable policies and faster subsidy payment continues. With strong plans, efficient operations, and predictable business conditions, Chambal's future looks steady, secure, and structurally positive. Chambal Fertilizers may not be a flashy stock, but it is a rock solid, stable, and cash generating business. Sales are steady, profits are predictable, promoters hold over 60%, and institutional confidence is rising year after year. With a strong ROE and ROCE, low debt, and zero demand risk, Chambal stands out as one of the most dependable names in the fertilizer sector, a true long term stability story. This is Sebi Charge, and you have been watching Decoding Equity. Thank you for your time and support. Stay informed, stay disciplined, and I will see you in the next video.